The thing too with a week like this week, with the price action being as bad as it's been, it really exposes a lot of the weaknesses we have, and it exposes kind of the FOMO that's kind of inside of us. It really starts to come out to the surface. I've noticed a lot of people online have been blowing their accounts up or just taking trades they shouldn't have been taking. But, these things happen. We're not always going to get easy mode in the markets, right? Groovy Gene says, hey, Kira, what live account brokers would you recommend? Live account brokers? Geez, I only trade prop firms, man. So I don't have any way to help with that. I'm also Canadian, so I don't know if that's going to help depending on where you might live. I know IB was I think it was Interactive Brokers was a pretty popular one when I was trading Forex. A lot of people were using that. But I probably should do something with a live account, but never thought about it. Just been sticking with the prop firms. So, okay. Let me just do one more thing here, and we'll get started. And if anyone has any questions or anything like that, feel free to drop it in the chat. No stress. We'll get to it. All right, my tablet's finally working. Okay, perfect. Rival says it went up to 300s, then just dropped down again to the 200s now. Assuming you're talking about NQ. Yeah, I've been watching NQ. Obviously, everybody's been watching NQ, but I've been watching this range more importantly. I find this range to be very, very interesting. Price action has been stuck inside here. And I'll give you guys a quick little tip on how to create ranges for yourself. One trick that I use is I use a line chart, and what I'll do is I'll just basically set like a channel using the parallel channel tool, and I'll just mark it from here, and I'll mark it to probably maybe like this. So it's just taking the high and the low. The line chart basically uses the candle high and low. It doesn't take the wick into consideration. And then I'll change it back to candlestick, and then you get something like this. And the beauty of it is it creates a range for you, and then you can see how price reacts to that range. So it's pretty easy way to do it. Luke, what's up? Welcome. So we got a bunch of things to cover. First thing we're going to cover is NQ. Nuno SG, what's up? Yeah, we're going to cover, like I said, we're going to cover NQ. There was a unicorn that happened this morning. I'm going to explain how I put that together. Funny story, last night I was a little bit, I wouldn't say bored, but I just kind of felt like I had some energy, and I was like, you know what, I'm going to practice time frame alignments on my charts. So I'm just going to go through NQ, New York AM kill zone, and I'm just going to practice, using a higher time frame analysis, then to a mid time frame, and then go into like the lower time frame. And I'm just going to just go through the motions, right? It's no different than a basketball player practicing shooting the ball in the hoop, right? Like outside their house or something like that. So for me, I was just like, I'm going to practice this. The reason being is that there's a skill that we've learned through Matt Ashtrades that, is in regard to the unicorn model. And basically all of my studying and my foundations are built from studying Matt and his teachings of ICT. That's how it all made sense to me. So I don't want to lose that skill that I have. And it's been years, so I want to keep that skill handy, and I would definitely recommend for everyone else to kind of keep themselves disciplined enough to kind of practice and not forget some things, because if you don't have the foundation, no model's ever going to work, and you need to build everything on a good foundation. So Let's talk about NQ and how I set the unicorn up. I'm not sure if anyone else caught the unicorn. I know Matt caught the unicorn, but I think he took an L on it because he was looking for 2R. And I typically, when I trade IFVGs, I just take my 1R and I'm happy for it, with it. And when I was looking at NQ last night through March, I noticed NQ, sometimes it would run, beyond 1R. It could go to like 2R, maybe a little more. But more often than not, it would kind of retrace after 1R. I find the London session might have more gas to it or momentum. But big reason was I just took the 1R because of what I saw yesterday and also just how I trade now. I don't really go for, massive home run moves. I just try to get in and out and then shut things down. Rival says, do you think it's better to have a 1-to-1 ratio or reward ratio trade with 60 to 70% win rate or 1-to-2, 1-to-3 trade with 30 to 40% win rate? That's a very good question. I have talked about this in the past. What I will say is when you're trading a 1-to-1R model or risk management system, obviously you need 50% win rate to be break even, right? So if you're at 60 to 70% in your win rate, then you're clearly profitable, and that's pretty good. The other thing with that is you're only losing 30 to 40% of the time. You have to remember this. There's a psychological element involved with losing. If you are racking up loss after loss after loss, that can only really happen if you have a very, very low win rate. So like if your win rate is 30 to 40%, you have to ask yourself, are you comfortable and able to lose 60 to 70% of the time? Because what that equates to is a string of losses in a row that could blow up accounts if you don't have proper risk management. That can create FOMO, meaning you're going to start trading models that aren't aligned with your checklist, perhaps, or the model that you're supposed to be trading. So you have to really ask yourself that question. So when I answer that, that's my response is, are you comfortable at losing that much? For me, I can't lose that much. Like for me, when I trade IFVGs with 1R, my win rate is somewhere in the mid to high 70s, maybe low 80s, but the typical sweet spot's in between about 75 and 80% win rate. And that's just taking 1R moves. But that's with strict discipline, like me not making mistakes. Also, following the risk management protocols that I have, right? Where it's like, I have to take that TP. If I don't take that TP, sometimes price just reverses right away. So for me, it makes so much sense to just take the 1R, it's copy traded, and my day's done in minutes, with IFVGs. Today, I thought, okay, what, let me keep an eye on these unicorns, and let's go through that right now. So the very first thing I did was I started on the 4-hour, and the way we learned how to read bias is we're looking for external to internal range liquidity, or maybe internal range to external range liquidity. Now, because I'm trading on the 1 minute time frame, I was looking at the 4-hour, I was looking at the 15 minute, and then I was looking at the 1 minute. So let's just examine how the morning opened. Okay, so we know that there is a 4-hour level right here. I'll just quickly mark that off. Here we go, sell side liquidity. Okay, now this candlestick right here is the 6 to 10 a.m. Eastern candlestick. Now, right now you're looking at it and you're thinking, how the hell could you have gone long, right? Keep in mind, when this level got swept at New York Open, that's what we need to see. We have to remember what price was actually doing in real time, right? Because we have a level here, and then we also have another 4-hour level here, which is also a daily level too. It's a daily low. But let's go to the 50 minute now, because then you're going to start to see a better picture as to how I set this trade up. So that H4 level that got swept, which would then mean that my bias is bullish, right? Because I'm looking for a move from external to internal. So where's the internal range liquidity? Well, it's way up here. What's up, Unicorn Barbie? So I was looking at, this level here. It's a 4-hour level. I was looking at this level here. And then, of course, you can see that there's a 4-hour SIBI sitting right here too, right? So I was looking for external to internal move. I'll just lock that up, right? So you can see that it's a move from here, sweeping here to go up here. That was the plan. That was the whole idea of the bias, was external to internal. Okay, and the reason being is that you're looking at what is price doing most recently, right? So the most recent price action is that sweep. If I just kind of go back to the left, I can see that this SIBI got tagged up here, so then you would be looking at a internal to external. So external would be here, this line right here, and this candlestick sweeps it. This was Thursday, right? Sweeps it. So once that's swept, what that means is now, is price closing below this level, or is price sweeping it? Because if it is sweeping it, closing back above it, then the potential is that you can go long, right? And then you'd be looking for a external to internal for a move way back up here again. The problem is there's no steam or enough momentum. Price kind of front runs, tagging this, and then reverses, right? And this is part of the problem with bias, which a lot of people have problems with, is when the price is kind of in the middle of nowhere, or it's kind of caught, we could say it's caught in between two draws on liquidity. It's hard to kind of figure out, like, is it going up? Is it going down? Should my bias be bullish? Should my bias be bearish? And in those situations, you can actually be neutral. It's okay to be neutral. But what that means is then you can then use the 50-minute to better align your setups. But it does add a bit more risk to it because you don't have that higher time frame alignment. Now with this trade specifically, because price was sweeping most recently a H4 level here, for me, it was obvious that, okay, well, we're sweeping a swing low. And the golden rule is you long from swing lows and bullish FEGs, and you short from higher time frame swing highs and bearish FEGs, right? So keeping that simple concept in my mind, let's look at where 930 was. And I'm just going to hit the replay button because I want to just show you what 930 looked like before price dumped, okay? This is what it looked like. So here's 930 right here, okay? Now, two things that stick out to me when you're on the 50-minute is that you can see that previous daily low is aligned with the H4 level. So we know that this level was key in and of itself. Secondly, everyone knows I like to use the daily EQ. I've talked a lot about it. It's something I have learned, and it's something that, to me, is just like a secret weapon on a chart. And what I noticed was, when I use the daily EQ, you've probably seen me, take trades off of it, using it like support and resistance, right? However, in this situation, trading like a unicorn or some sort of a swing failure pattern order block, which we're going to talk about more so in the tutorial in a bit, I'm literally looking at whether price is trading above that level or below it. Because if price is trading below it, then that means it's trading in a discounted range, which means I should be looking for longs, not shorts, because I want to be shorting on the right side of premium and discount. So that idea still sticks with how I have traded IFVGs, right, where I'm looking for shorts above this level and I'm looking for longs below this level. So because price is below that level, I'm looking for longs. Now, is there a mid-time frame alignment aligning with that higher time frame bias? So at 930, we get this long candlestick here, right? So let's look at what that entails, like what levels were potentially at play. So there's a 50-minute swing point right here. I'm just going to mark off these sell-side liquidity levels, right? We got one there, we got one here, and then we have a 15-minute bullish FEG here, right? A busy. So let's mark that off. Okay, so this is what we had at open. Let's go to the 1 minute. We can take a much closer look to see what we're looking at. Okay, so as price is retracing through these levels, okay, at open, all I'm looking for is two things. If I'm trading this type of a model, and I've talked about this in the past, you probably hear me say this a lot. I've talked about this in the past. It's because I like to repeat a lot of information that I feel is important. And I've often talked about how when price is reaching a key level, there's typically like three types of entry models or patterns that I've come across. The first one is, of course, what we've learned, which is the unicorn model, right? Price goes up, price comes down, does something like this, right? That's number one. Number two is, actually, before we go to number two, number one then either becomes a unicorn, right? Either becomes a unicorn, right? That's your breaker block. Or if it's not a unicorn, it's just a breaker block entry with the change in state delivery as your confluences, right? And you've seen Matt take those types of trades before. So there's no surprise there, okay? So that's why I just say it's a breaker block / unicorn model. The second thing you'll see is what I typically trade with IFVGs, which is we want to see a V-shaped recovery, right? We want to see a 3-candle pattern creating the IFVG, right? Like this. And once price closes back above the FVG, maybe it creates a BPR, but the IFVG is created, market order entry, right? That's the second thing you'll see. But in terms of what I was looking for today, I was looking for either the unicorn model or a breaker block change state delivery type model, or I was looking for a swing failure pattern, and that's the third one. So that's when price sweeps into a level, doesn't create a liquidity sweep, but then creates a swing failure pattern, and you get something like this, okay? And there's different ways to trade this, and I might as well just talk about it now quickly. I was going to talk about it later, but I'll just talk about it now and get the tutorial out of the way. When we're trading a unicorn, we know about breaker blocks. But when we're trading a swing failure pattern, there really isn't a breaker block. You have an order block, though. So what that means is when price tags that key level and then starts to create the swing failure pattern, this is now becoming a higher low. What I typically do, and what I've done just in my practice, is I'll mark the lowest down closing candles on this leg. So it would look something like this. So similar to how we approach a breaker block, where we're looking for the lowest, or in this situation, we'd be looking for the highest up closing candlesticks before the leg down that takes liquidity, right? So it'd be something like this perhaps, right? And then we'd be placing our entry at the breaker block. What I'm looking for in this situation is I'm not looking for the highs. I'm actually looking for the lows, because I'm looking for the candlesticks that create the swing failure pattern. And the only way to go long is by looking at down closing candlesticks that create the swing failure pattern, that create that create the higher low. And that would be these candlesticks here. So once these candlesticks are formed, and if I see price start to break back above this level now, well, then what that does is it tells me with confidence that we have a swing failure pattern, we have an order block here, and what I'm then looking for is to enter either, it could be a market order entry depending on how price closes above here. Same with the unicorn. Like sometimes, I know we've been kind of talked about setting limit orders, but for me personally, like if price just like barely closes above the breaker block, I'll just market order in because it's so close, right? If price closes way up here, then I will set a limit entry. And today that's actually what happened. I'm going to show you right over here what happened. And then if we just quickly talk about the order block swing failure pattern again, when price breaks through that order block, it's the same idea, right? If price closes just a bit above, it's a market order entry. If price closes a little bit higher, I'll then place a limit entry here, and then I will, look for 1R. And there's different ways you can measure out the moves, which we'll also talk about. So these are 3 key entry triggers, patterns, models, whatever you want to call it, that I've come across and have seen at key higher time frame levels when a reversal is about to take place, is one of these 3. If you don't believe me, get yourself on a chart and just honestly go back through the month of March, look at NQ for New York AM kill zone, 9:30 a.m. to 11, and I promise you will see. Don't worry so much about the IFVG, because the model we're looking at here is the order block swing failure pattern and the breaker block unicorn model. So you'll see 1 and 3. Take a look, you'll see it. I mean, of course, there's probably going to be a V shape in there too, but I just want you to see look for these two. The thing is with the V-shaped model is it can still create the swing failure pattern, right? Because there is a V in the swing failure pattern. See you, Luke. Peace out, brother. Good to see you, man. Hope you have a good weekend. So let's take a look at the trade now. Now that we've seen these three types of models. I'm just going to move this. Actually, I'll just quickly delete all this stuff just to clear up the chart. If anyone has any questions, drop it in the chat. Okay, so let's go back to this trade. So I was looking for 15-minute sell-side liquidity levels to go long at 9:30 open. Has to happen before 11. So we get massive sweep at open. We're below the daily EQ. I can see that level get swept. And then I see another level get swept. So I'm like, okay, this level got swept. That's cool. Now, if we just zoom in a little bit more now into what's happening here is you see the 15-minute FVG, bullish FVG, the EQ gets respected. I often talk about ranges and how it's so important to mark the EQ of your range because price will definitely show its hand when you see that EQ get tagged and respected. It's a very good sign. So in this situation, not only do we get price sweeping into this level, but we also then get a lower time frame liquidity sweep, right here. I'll just mark it like this. Okay, so there's your market. There's your liquidity sweep. And as we know, when we're trading unicorns, we need the sweep. We need a change in state delivery to then confirm, which is inherent with this type of model. And then we can then start to identify the breaker block. So we're looking for the highest up close candlesticks before the leg down that takes liquidity. So what are those candlesticks? Or candlestick in this case, because we have a low here, and then we have a high here, and then we have a series of down closing candles that create the sweep. So this candlestick right here at 9:36 becomes our breaker block. And I'm going to mark it, and I'm going to just put breaker block here, and I'm going to pull it over. Okay, so when you start to put it all together, you have a bullish bias on the H4. You're looking for external to internal. You go to the 50-minute. You wait for 9:30 because time is very, very important when it comes to trading, I think, any sort of model, especially on the lower time frame. And then we're looking for mid-time frame alignment with the market structure. So that means we're looking for sell-side liquidity or bullish FVGs to get tagged. In this case, we get both. Then we're looking on the 1-minute time frame for that entry function, right? We're looking for liquidity sweep or we're looking for a swing failure pattern. In this case, we get the liquidity sweep once again. We can form the breaker block. We have the CISD right there, which is once again mandatory when you see a unicorn. It's always going to be there. When you get a swing failure pattern, you're not always guaranteed to have a change in state delivery. So just understand the difference there. And then once price closes above the breaker block right here, and remember I talked about how if price closes a fair bit above the breaker block, like this, for example, then I'll use a limit order because I don't want to market order here. I want to try to get an entry as close to the breaker block as possible. So I had set a limit order entry like this. My stop loss just went to the low because it's not too far off from where the low of the breaker block is. It's not too bad. We got about 36.5 points. And the other thing was when I was looking at my, just a lot of the research I was doing yesterday, the studying, I just noticed with NQ, price typically would reject around 1R and completely reverse. So there's no guarantees you're going to get 2R, okay? And then given the way the market's been trading this week, which has been absolutely garbage, it's total proof that you just need to take base hits. You can't go for home runs. You can't expect to hit a home run given that the last 4 days have been as terrible as they've been. It's been very, very hard, very, very tricky to trade. If you don't have, a checklist with you, it's going to be very, very hard. You're going to make a lot of mistakes because the market was just literally tripping everybody up. So for me, I just targeted 1R. And the thing with trading with 1R is I want to align that 1R with some sort of a draw on liquidity. And when I looked for draw on liquidity on the 1-minute time frame, what I got was this 1-minute fair value gap right here. So I already know my target's right up here anyways. And I don't know what's going to happen, right? Because when I'm looking at this, there's the daily EQ here. I'm thinking, well, that's a valid target for sure. If I went up higher, there's London high right there. There's Asia high right there. So, price does have a lot of reasons to go higher. But just because there's reasons to go higher, it doesn't mean it will go higher, right? Price is going to do whatever it wants whenever it wants. A wise man once said that. So as price hit this level, my TP is taken, and look at the minutes. This is a 1 minute time frame. I entered on this candlestick, and then literally less than 2 minutes later, I've already got 1R, and my day's done. Okay? So it goes to show that even trading unicorns or swing failure patterns, you can actually get in and out of trades super quick if you know how to kind of put things together. And then also abide by these rules and the criteria and the system itself. Now, another thing I do with unicorns is you've often seen, Matt use standard deviations to project where price could go, right? So all you're going to do to do that is you're just going to use your Fibonacci tool, and you're just going to measure from the swing low to the top of the breaker block, and then you're just going to measure higher. So what that tells me is here's -1, here's a -2 to -2.5 range, which is in line with the daily EQ, and you can start to see the alignment with things, right? So as we know, price actually rejects off the 1 minute SIBI EQ, once again, ding, 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 EQ, and then completely reverses. Okay? Is there any way that I know this is going to happen, or anyone else? I don't think so, right? There's no way to tell. All we can tell is the probability of the situations, right? So if price is reaching some sort of bearish drawn liquidity, well, we know if price is reaching some sort of a bearish drawn liquidity that there could be a potential reason for price to go the other way. And then you just have to wait and see what the outcome is. In my situation, I was happy with 1R. I didn't really care what happened after that. My goal and my objective was to just align the higher time frame, which was the H4, with the mid time frame, which is the 15 minute, and then execute a long entry model on the 1 minute time frame as best as I could. And that's all it was. So if you go back through the days and just do this kind of the same exercise, I'm positive you'll see that you're going to see those two types of models, those entry functions appear quite a bit. Because I noticed it quite a bit, and they were pretty accurate, and it was actually quite refreshing to go back and do that exercise, because trading IFVGs for as long as I've been trading it now, I have not been trading unicorns and haven't really looked at it. So it was nice to feel the results getting that W, trading in this way. And of course, I know most of the community is trading unicorns and whatnot, so I know this might align more so with those folks. So that's the unicorn model. Anyone have any questions about that? Anyone catch that? If not, that's cool. No stress. Awesome, Med. Sweet. Thanks, 99. All right, so let's take a look at my notes quickly, double check some things. Okay, so the other thing I'll tell you is when it comes to, I feel like when it comes to trading, and I mentioned this at the top of the session, that when the market is on easy mode, it's very, very easy to bend rules or to use lower probability levels to set up trades on, and then they just all work, and then you go, oh my god, I'm a genius. Like, there was 4 longs I took today, or there's 4 setups that I put together and they all worked, and you think you're a genius. It's in those moments that you got to remember, like, if that's happening, that the market is on some form of an easy mode, right? When things are just firing off on all cylinders. The problem is you never know when hard mode is about to happen. Like, we went into this week on a Monday, and there's no way to know what we were going to get. And this is part of the problem. Someone had actually asked me about this and said, like, how do I know when it's easy mode and when it's hard mode? Because when you know it's hard mode, it's already too late, right? You've already probably taken a bunch of losses because your setup just keeps forming, perhaps. And this is where having very strict rules and a system come into play because it will save you. And I'm going to show you what I mean. So I trade the IFVG model primarily, and I just want to show you what happened today and what kept me safe. And I only took one trade, and that was that unicorn I just showed you. I was keeping an eye on the alignments, like I said, but I was also keeping an eye on the IFVG model because at market open, which is, this candlestick right here. Let me just hit the X button quickly. This price is just dumping. We can also take a look at that in a bit. But at market open, once again, this candlestick right here, I was just looking at, key levels, right? Those same key levels that I had already marked off. I was waiting to see what was going to happen. So I'm just going to redo this. So we know that this is an H4 level. We know that this is previous daily low, right? So I'm just going to change it to previous daily low because that's what I typically do is I'll mark it accurately to what it is on exactly what it is in the moment. So when I'm trading IFVGs, I'm looking for these types of things. Let me put my checklist up here. Okay. So I've started tightening up my process. I went into this week with a tightened process. So it's just perfectly timed that I decided to do that because if I didn't, I would have taken a bunch of L's because the 15-minute liquidity levels that I was taking before, which were all working, they actually would not be working right now. But there's some really, really small things, like finer detail points that kept me safe. And I feel like this is only there due to experience, like exposure with trading this model. And then the second thing is having the visual aid reminding me. So if my mind is creating FOMO saying like, oh, you should take this trade, it looks too good to be true to pass. Or, our mind often tells us a lot of lies and gives us that courage that, to override our logic, to override the principles and our rules and our systems, right? It happens across probably all areas of our life. One area in specific that I can think of is the gym, right? We know we should go to the gym, but maybe you wake up and you're feeling tired and your mind says, oh, you know what? You're tired today. It's okay to take a break. Have some, compassion for yourself and what other crazy things your mind's going to tell you. But the reality is like, hey, it's Wednesday or, it's Friday today. I got to do legs today. Like that's my schedule. If you don't follow your schedule, you're going to fall behind, right? But your mind is telling you all these other things. I always used to have that happen to me I still have that happen to me, but is one thing I can kind of draw a comparison with. So today I was looking at this and previous daily low gets tagged, right, at 6 a.m. I'm still watching that level. I'm going to go to the 1 hour because I also use 1 hour levels. Let me just double check. Yeah, because it was this level here. So you have an hourly level there, which also was a 4 hour level, and it was also a daily level, as you can see right there, right? So I'm actually just going to mark it off as a daily sell-side liquidity level just because it is what it is. Now let's just examine what's happening here, okay? So if I was using a 15-minute level, that would have been this level right here. However, I'm using hourly levels, and guess what? That previous daily low, I'm just going to change that line because you can see right here we have an hourly low formed here at 6 in the morning. So I'm just going to move this over here and just accurately mark off these levels as they are in real time for when price started to rip through them. So let's just put it back like this because this is the traded hand here, okay? So all of this happens. There's literally nothing I can do. There's no setup. You're probably looking at this saying, oh, there's a daily EQ tap here. But if I go back here, you'll notice that the daily EQ is way up here, right? Because it's a dynamic level that moves with price action when new highs and lows are created during New York. So this line is the EQ of the current daily range. So if the daily range once again expands during New York session, this level is going to move. It's dynamic. So as all this is happening, there's literally nothing for me to do except wait. We're below the daily EQ. I want to be on the right side of premium discount, which means I got to take longs. The only way I can take a long is if these lows start getting taken out, right? So let's just hit play. Okay, so we get one of these, and then we get a sweep through that level, okay? So I'm watching this play out, and you'll start noticing right here, okay? Because this was the play at hand, and I thought, okay, well, I've been waiting for this level to get tagged. Now it's tagged. What do I do? So when I'm looking at this, I got to pull up the checklist, double check everything. I already know I'm trading in the right time range, right? I know I'm trading on the right side of premium discount. I'm looking for a higher time frame liquidity sweep, so I know that is happening because here's an hourly level. We also have previous daily low here. So I'm literally looking for a strong reaction, which is, I want to see something like this. Whoops. Let's try that one more time. I want to see something like this form, right? That nice V shape with the least amount of candles as possible to show me that there is strong momentum, right? Now, here's where it gets tricky, okay? Is there a clear draw on liquidity? 100%. There's loads of liquidity up here for price to reach to, right? Now, is there a higher time frame internal range liquidity? If I go to the hourly and the 4 hour, I can see that there isn't, right? Maybe on the hourly, I would say no, there isn't, okay? And I'm not going to go to the 15-minute because that's way far away. So I would say that there is no higher time frame internal range liquidity, which is fine. It's not a mandatory thing for me, but it is something that I do keep on my checklist, because if it is there, it just starts giving me more confidence that, I'm dealing with, an S-tiered setup. Now let's just talk about what happens, okay? So here's the 1 minute, and price starts to... Wait, this reset on me. Oh, that's weird. I'm surprised it did that. That's crazy. Why did it do that? I was like, hey, that doesn't look right. That actually looks like a proper setup there. Okay, so this is what I'm looking for, right? Now, you can already see price went lower, but let me just quickly talk about this because it's important to see this. So my indicator is now starting to fire up, saying, hey, there's a sell-side liquidity hourly level that got swept. There's a series or a stacked IFVG setup, okay? So I'm looking at this level and I'm waiting to see what happens, okay? Now, my mind is playing tricks on me, okay? And you're probably saying, well, why is your mind playing tricks on you? My mind is playing tricks on me because I've been waiting for such a clean setup to happen that you get anxious. You start getting anxiety, right? Because you're like, oh, that setup is getting close, right? So you start to get the adrenaline flowing because it could be any minute now, right? Any minute now I'm going to be in a trade. This is normal to feel, those nerves. But as I'm watching this, I need to see two things happen. The first thing is I need to see, the IFVG confirm. Now, some people use singular FVGs to form the IFVG. So like the FVG would have formed, actually, let me use this. So they would use something like that, this one right here. However, the way I learned how to trade IFVGs through various traders, I noticed that the safer way to do it is to stack FVGs if they are stackable. So in this situation, these two can be stacked, meaning if price closes above here, I could technically have a setup on hand. Now, if this doesn't happen, then there's no trade. So you can see right now, this didn't happen, so there was no trade. However, on the 30-second chart, this setup actually was valid. But I was sticking to the 1 minute time frame just due to the risk, because the 30-second setup was in here, but I knew that the 1 minute still had this gap here, and it's just safer to wait. Don't need to FOMO into anything on a Friday especially. And then once again, just going back to the checklist, right? If I can't get that confirmation, then there's no setup. The second problem with this setup, even if it did confirm, which as I started going through my checklist, I started realizing was that you have a FVG right here. And what does that represent? What does that mean? It means that if this FVG confirms, if this IFVG setup confirms like this and it breaks out, right? Maybe it does something like this and it hits this, there's no telling what's going to happen here. So what does this represent? This means that this setup is actually non-singular. So when I was looking at this on my checklist, I already knew this didn't confirm. So even with the FOMO, like, on this candlestick, when price looked like it was going to close above the level and it didn't, this is why you got to wait. You can't just jump into trades sometimes. I then looked above, and this is where I realized on my checklist that this is not a singular setup, right? Even though I would be targeting this range up here, this thing right here makes it non-singular. If this wasn't here, then it would be a singular setup because my TP would be all in this range and price would have something to reach for. So once again, no trade confirmed, no IFVG confirmed, and even if it did confirm, if I took it, I would break a rule because it's non-singular. So when I look to my checklist, 1, 2, 3, 4, 5, and 6, these first 6 are mandatory for me. This single point right here, even if this confirmed, would have made this an invalid trade for me. So having really tight rules or criteria or system keeps you safe across all price action modes, easy mode or hard mode. Okay? So when it's easy mode, this is when you start seeing loads of people flashing P&L, like I made $30,000, I made $12,000, I made $5,000, right? You see a lot of people doing that stuff. Now, I'm not saying that you should compare yourself to these people because you shouldn't. If anything, you should just not even see it. I don't have Twitter open when I trade. I have Discord open, I have our chats open here and there, but I'm not really looking in the chat too much. I do a lot of posting and trading with live conversation inside Unicorn University, which is Ash Trades' premium side. And I trade with a few people in there. We share ideas and things like that. But ultimately, the whole point I'm trying to say is when you're trading, you really need to keep the circle around you small, right? You need to keep it so small that you're only really trading with people who are trading like you. It's very, very important because if someone else is trading a bit of a different way, and I've seen this happen with some other people, and this has happened even to me in the past, is that someone's not trading the same thing as you, which means they're not looking at the chart the same way you're looking at the chart. And what that means is then they're going to introduce to you a different type of criteria or concept. And when they say that and they say, well, hey, there is, a higher time frame, SMT. What that does is it then makes you doubt your own system. And when you start to then doubt your own system, you're now pulling away from your rules that you have made for yourself, that you have taken time and spent endless amount of hours studying, researching, compiling data on, and practicing. You're literally going against all of that. And I can't tell you how many times this happens to people. And I only say this in a general way because I've had this happen to me on a personal way many, 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 many times. More than I can count. I've lost accounts over this. I've lost a lot of money in terms of your accounts. And then you're over leveraging because you think it's too good to be true. There's a whole wave of things that can overcome your critical decision making, which are all, not based at that point on the logical stuff you've put together. So very, very important to keep that circle tight for yourself. If you're trading a specific way, once again, just keep people around you that are trading similar to you. Don't expose yourself to things that are not in line with how you're trading because you really need to focus on what you're doing. Okay. So this was the IFVG setup that I did not take. And for the rest of the session, I just watched price action literally just crumble and not really set anything up for myself. And then by 11 o'clock, my session's over. And you can see here at 11, price is just chopping, right? So I was looking to see what price would do at this level, this daily sell-side liquidity level. However, we never got that sweep, and then 11 o'clock hits, and that means my day is done. From what I've compiled with my own data, if I was using 50-minute time frame levels, I would have had a lot of stop losses. Sure, there's a lot more trades. There could be like more wins, but what that does is it creates more headaches, more problems. And what I want to try to do is create less headaches and less problems. And what that means is by using higher time frame levels of liquidity like the H4 or the H1, I'm still using overnight sessions like Asia and London highs and lows, as well as previous day high and low, and the daily EQ as an SR kind of setup. It's the H1 and H4 levels that are going to keep me safer than using the 50-minute levels. And today is a great example of that. The second thing is, what was I going to say? By having the time cutoff, that also reduces my risk in the market. You don't need to be trading all day long. We see so many people trading all day long and they're sharing wins and crazy things that are happening. And the reality is trades can happen throughout the entire day. We already know this. But the fact is it's not safe to be trading all day long. Why is it not safe? Well, number one, you're exposing yourself to more risk, which means you could lose, right? Secondly, you're exerting way more energy, mentally speaking, right? Like your mental health is insanely important in this business, which means the less stress you put on yourself while you're trading, the better you are for it, because that means you can now show up for the next day with a very refreshed headspace, a clear mindset, clear focus, right? If you're trading 8 hours for the day, do you think you're going to be good to go tomorrow? Probably not, because you still have life to deal with after that 8 hours. And I don't know what your life looks like, but a lot of people are still working multiple jobs, or maybe they have lots of kids they gotta worry about, right? Or maybe there's another situation that you have. So by having a shorter time window to trade, once again, it just reduces so much more off the table for you, and it just helps you to increase your winning probability because you're just putting yourself in the highest of probability situations, which is often really overlooked, and the reason being is because it's not sexy. Being a patient, disciplined trader is not sexy. I mean, if we look at Matt, for example, there's a big reason why a couple years ago why I really locked in with him was because of his professionalism, but also his sense of discipline. I'd never seen anyone have that type of discipline, and then I find out once again that he was under 30 years old too, which made me laugh because I thought he was in his 40s. That's a whole other topic of conversation. But what I'm trying to say is seeing that showed me that there is a better way to go about this in trading. And yeah, when you're learning, when you're trying to put things together, of course, that is the time to spend all the waking time that you have into the craft. I've done it. I'm not telling anyone to not do that. It's part of the growing pains of this whole business. What I'm saying to you is when you have figured something out, you've figured out your edge, okay? That's when you have to start to pull back now, okay? More does not mean you're going to get more. More actually means you're going to get less out of it. So you need to be less, because less is more in trading. And it's not sexy, because there can be, like this week, for example, I have taken a couple of trades, but they've not really been the typical liquidity level sweep IFVG setup. It's been like trading off the daily EQ. Honestly, that's what it's been like. Those setups are a completely different setup, but it just goes to show how hard it is to trade right now. So I hope that resonates with you. Hope that makes sense. I'm not sure exactly where everyone is in their journey. And like I said, I'm not saying to you to stop practicing and stop backtesting and, and stop exposing yourself to the market. If you're in a specific, earlier stage in your journey, you have to do that, right? Because it's like a boxer in boxing or a fighter. The more in-ring experience they have, that's going to only make them a better fighter as they move on in their career. The thing is that time is limited, right? There's only X amount of time that's allotted to being in an actual fight. Just like trading, there's a small window that we are open and available to trade. So this is why people expose themselves to more, because they're trying to get that experience, that live experience in, right? So you'll see people trade AM, you'll see people trade New York PM, you'll see people trade Asia session. I have done this. I have gone through the ringer with this, and I will say you will burn out, because I burned out. It is 100% inevitable. And then when you start burning out, that's when the bad decision making starts happening. So anyways, that's a lot of mindset stuff and a lot of lessons I've learned that I'm just happy to share. Let's take a look at what's happening right now quickly. And I'm just going to check my notes to make sure I've covered what I needed to cover. Yeah, we covered the setup today. We covered the unicorn. We covered the IFVG, risk management. Groovy says, can you explain more about Singular in your checklist? You didn't understand that part. My bad. I just saw that right now. It's super simple. It's super simple. So if I'll just quickly go back to where we were. Okay, and I'll pull up the checklist again so you can see it. Singular. Okay, so what that means is when I enter an IFVG model setup, like let's just say this confirmed, okay? What that means is that I do not want to see an FVG or an imbalance located anywhere near my entry. Because if I do, what that means is that is a possible roadblock that will reverse my trade. So if I want to go long, I have no idea what price will do. And this little FVG here, this little SIBI, doesn't look like it might cause that much damage. But honestly, I've seen small FVGs like this cause massive reversals. So singular means this doesn't exist. If this doesn't exist, right, then that means I don't have a non-singular setup. I have a singular setup, because singular refers to the FVG itself. The only FVG I want to see in sites is the FVG that becomes the IFVG, which is this. I do not want to see any more FVGs in the way of my setup. If I do see an FVG in the way of my setup, it has to be located where the draw on liquidity is, which is, in this situation, all of this right here is perfect, right? Because let's just say this was a good setup. Let's say I enter around here. My stop loss goes just below the base of the FVG. Look at where 1R is. Right inside of the draw on liquidity, right? That's what you want to see. You want those FVGs to be where the draw on liquidity is, where your 1R is, or where, whatever you're trying to do. There's also equal highs right here too. So this is a very key area to take profit, either fully or to have skimmed. Once again, however, this is a non-singular setup, and then once again, this actually didn't confirm. But I hope that explains. Hey, no problem, 99. No problem, Groovy Gene. Appreciate that. It was a good question. I'm happy to talk about it. Let's just go back to current price action. It's 2 o'clock, so I will be ending the session very soon. I just want to see what has developed with price action here. And we could kind of just quickly read it a little bit. So that key level finally got swept. Okay, not bad. So how would I play this? If we're looking at it from, multi-time frame analysis, it's a 4-hour level sweep. If we go to the 15-minute, there is another sweep here, right here. That's your 15-minute sell side level sweep. If I go to the 1-minute, what does it look like? Let's take a look. Because remember, we talked about those key reversal things, right? Those 3 key reversal models that we see. So sure enough, what we're seeing, leg down, liquidity sweep. And you know what that means if there's a liquidity sweep. What that means is there's going to be a change in state delivery, and there's probably going to be an order block, a breaker block, potentially forming. And then what that means is that you could have a potential unicorn on your hands. So if we're looking at this massive setup here, now it is below the H4 or D1. It is below the 50-minute sell side liquidity level, and given the time, of course, not something I would be entering a trade into. But if we're just kind of setting it up just to, get some practice in, this is how I would have done it, right? Higher time frame sweep, go to the mid time frame, look for a swing low or a bullish FVG for price to either sweep or tag into. and then look for one of two different types of entry models, the breaker block or unicorn, or the order block and the swing failure pattern. So in this case, because there's a sweep, that confirms the CISD, which then starts to confirm where the breaker block is. Now, where would the breaker block be in this situation? Seeing how these candles, this is the high, and then you don't really have another proper institutional high, I would say, right? Because there's a low here, but then there's no high, and then price makes another low, and there's no clear low until down here. So even though there's a high here, I wouldn't use this. I wouldn't use any of these candlesticks here, like this one, for example. I'd actually just use this series of candlesticks like this. Now, sure enough, the breaker block becomes pretty big, right? There's a lot of candlesticks creating that leg up. You're now starting to see bearish SMT on the underside of this rejection level. But once again, if we're just talking about practice, if we're just talking about, how to align things, it would just be exactly like this, right? And this closed, a little bit above the breaker block. I probably would have still used a limit entry here if this was, traded during a different time frame, a different time hour, like the New York kill zone, for example. But we are in the PM kill zone. Some people trade that. Not, once again, telling people what to do. But, if we're looking for TP, there's a couple ways to go about it. Once again, you're just looking at the draw on liquidity. You can see there's a lot of LRR up here. The way I would trade this type of model versus the IFVG are very different, by the way, right? There's no concepts of singular and non-singular. It would just be literally what I've showed you, and then I would just be looking to take that trade. You could then even pull this up, right? There's your -1, there's your -2, pretty aligned. Once again, though, we're dealing with time, right? Lower probability setups typically form in the PM session. So we can kind of watch this for a little bit. If I was looking at this as an FVG setup, let's just pull up the MNQ chart. Okay, so here's MNQ. Get rid of this. So once again, we know this level is very key. Right here was a daily level, daily sell side. It looks like there's a volume imbalance right here, but it is MNQ, so I don't know how reliable that can be. Hey, no problem, Groovy Gene. Peace out. God bless you too, man. God bless you too. Let's go back to the 1 minute. Okay, so let's just take a look at this for a sec. So very key sweep. This is kind of what I wanted to show, right? Like, I mean, this is a pretty okay example. So price sweeps below. If we're looking at FVGs, let me see if I can turn this on, switch it off. Let's turn this filter off for a second. I think it might show this. Yep, it did. I thought it would. So let's just talk about this setup. So we get the higher time frame sweep. Let's put the checklist on, actually. We do this kind of in real time. So we had no idea all this is going to happen, right? So when price is doing this, this is what it looks like. Okay? This is what it looks like. So first off, if I was trading this and I was okay with trading the PM session, don't worry about step 1 here. That wouldn't be in the question. Are we on the right side of premium and discount? Well, we sure are, because the daily EQ is way up here. So that was an easy check. Higher time frame liquidity sweep, 100%. We swept the daily level. Higher time frame, okay, sorry, we said that right. Is there a strong reaction off that level and good momentum confirming the IFVG? Well, we're getting that V shape, right? So we are getting some sort of a reaction. Now, would I say this is an instant or strong reaction off this level? Not really, because we're getting a lot of acceptance below it. Okay, so it's not ideal. However, the recovery in terms of the momentum confirming the setup would then become very important, because if this level gets taken out, we want to make sure that we see a very strong move going the other way to create that V shape, right? So as price confirms the FVG, now this is showing it as a singular setup. It is set up as series. It should should have caught this right here, in my opinion, but it set it here. So for me, I would have said this was the accepted IFVG right here. I would have entered on this candlestick, like if I was setting it up, stop loss at the low, and then you target 1R. But here's the thing: is this a singular setup? This is where where it gets tricky, because if you're taking the setup off this candlestick closure right here, it's right inside of a bearish FVG. Secondly, if you're taking the setup once price closes above this level, like this, then your entry is here. So what happens then is you have a swing point right here at about 14 points. That gives you a 0.41 risk to reward. So you have a negative risk to reward, and then you have FVGs lined up here. Let's just see what happens. Okay, because to me, I probably would have passed on this, and I would have deemed this to be a non-singular setup. Only because if I go back to what I said earlier, is the FVG, or in this case because I'm going long, is the SIBI in the way of my trade before price gets to my 1R? And the answer to that is yes. Let's see what happens. So if I had entered on this position, it immediately goes to stop loss. So that, once again, that one little concept is the difference between me hastily entering into a trade because it looks really good and me staying out because I'm looking for perfect conditions, right? So that would have been a stop loss avoided right there. Okay, let's hit play. See what happens next. And of course, there's no telling what price is going to do, right? Like, price can wipe you out and then go the other way and then continue going the way that you wanted it to go. Like, that happens. That happened to me the other day. I got stopped out on break even, and I liked the momentum of the way price was trading, and also how ES looked, right? ES looked significantly weaker on that short, so I decided to re-enter, and I was rewarded with the win. But if one of these factors isn't there, then there's no setup. In that trade, all of these things were there. It was a S-tiered setup for me, so I had to really keep a close eye on it. But as you can see, this is literally showing you what I'm talking about. Look at where price reverses. Look at where price reverses. It reverses off the EQ of the 1 minute SIBI. Non-singular. The other thing is, if you are going to risk trades in this way, and I'm not saying I would or that you should, you'd want to then start to target your TP here, right? And then that would then mean to reduce the size of your stop loss. But then you're adding way more risk to trade parameters given the size, right, of your stop loss, and maybe the size of the candlesticks leading up to the setup itself. Because if the candlesticks are sized, like, you have to think about it. If each candlestick is sized at like almost 30 points, then having a stop loss that's like 20 points, you could get stopped out in one candlestick. So you can see this is 34 points and a swing low. Now, I'm not saying, once again, that this trade is valid for me, because it's not. But you can see the thought process that goes into this, and the way you got to think about things. But here, once again, bearish SMT forming inside of a bearish SIBI, and price delivering from that level. So even though this looked good, right? It looked good from far, but it was far from good. Finance says there was a setup on ES around 1:39 p.m. Didn't end up taking it due to there not being an SMT and non-singular. That checklist is goated. Hey, man. Happy to pay the information and education forward, honestly. And you've been crushing it, man. I've been seeing some of the trades. Well done, man. Honestly, well done. It takes time to perfect the craft. There's no timeline for each of us in order to, like, when we will get it, like, where things just kind of lock in. And you can't compare yourself to anyone. Honestly, do not compare yourself to anyone. It's a big reason why I don't show PL. It's a big reason why I don't show much, because to me, A, I'm not selling you anything, so I don't feel like I have to share that, right? Number one. Number two, I don't actually feel like it helps anybody. Like if someone is just showing PL, and this is not knocking shade on anybody, this is my opinion based off of the experience I have and what that type of information does to me. I don't ever feel good when I see a lot of P&L shares. And I know people are celebrating, and I, of course, I'm not feeling jealous or any sort of ill will towards anyone. That's not what this is about. But what I mean is, it makes me feel like I'm doing a bad job, like I suck as a trader, like I'm less. That's what it makes me feel like, because I'm thinking, well, hey, that person just made $50,000 in one day. How come I'm not making $50,000 in one day? And I'm just using that as an example, because those are some of the numbers that I see out there. And I'm sure if people are also seeing them, like, it's not going to help you. It's probably going to create some sort of FOMO on a psychological level, right? On that mindset. So for me personally, I am a bigger fan of people sharing their charts. I'm a bigger fan of people showing executions on charts, right? Because that to me shows the skill, right? Just showing P&L doesn't show me the skill if I want to learn, right? It just shows like, hey, you're celebrating, and that's great. There's obviously a place for all that, and there's rooms to celebrate and things like that. And like I said, there's no ill will, there's no judgment, there's no anything negative. It's just we have to protect our own mindset and our own mental capacity, because you are the one pushing the buttons. You are the one that is going to have to show up and win. So you have to protect yourself in all areas of this business. You have to protect your mind. You have to protect your heart. You have to protect your skill. On that note, I really appreciate everybody's time today. And I'll be back on Monday, 1 p.m. Eastern Time. I hope everybody has an amazing weekend. Make sure you touch some grass. Even if you're going to study and do stuff like that, make sure you still take some time to touch grass and, be with your family, be with your friends, be with your kids, be with your wife, be with your partner, whoever it is. Just make sure you're not looking at a chart at some point in your weekend. And I promise you're going to feel way better about it when you show up on Monday. So on that note, peace out. God bless everybody.